BlackRock controls over $10 trillion. That's not a headline, that's reality. It is the largest asset manager in the history of finance, bigger than most economies, more connected than most governments. And here's the part almost no one talks about it.
BlackRock control $22 trillion in assets, which is roughly the equivalent of the entire gross domestic product of the United States of America.
BlackRock.
What is BlackRock and how do they own everything?
And no, it's not a government, it's not a secret society, and it's not a billionaire like Elon Musk. It's one company you've probably never really looked into, BlackRock, and yet almost no one talks about it. It didn't dominate headlines, it didn't build a product that people line up to buy. It did it quietly, step by step, inside the system itself. Today, BlackRock owns stakes in companies like Amazon, Tesla, Google, Apple, and Microsoft, and thousands more across the world.
Apple, Microsoft, Amazon, Google Alphabet, Tesla, United Health Group, Johnson & Johnson, Berkshire Hathaway, Nvidia, Exxon, Visa, and the list goes on.
This isn't just about money. It's about how power really moves. Behind markets, behind capital flows, behind the movement of money itself. And once you see how it works, you start to understand something deeper. So how did one company that most people barely think about quietly build this level of influence? How do you go from managing bonds to sitting at the core of the global financial system? And more importantly, what does that mean for everyone else? To understand that, we need to go back to where this really started, not with power, but with a mistake. Back to a moment that looked like a failure, not a success, not a breakthrough, a mistake. Late 1980s, inside Wall Street, a system built on speed, confidence, and risk. At the center of it was a man named Larry Fink. At the time, he was already successful. He understood markets, he knew how money moved, until one trade went wrong. A large position based on interest rates and mortgage-backed securities. On paper, it made sense. The models worked, the assumptions held until they didn't. The market moved in a way no one expected, and almost overnight, nearly $100 million was gone. In a place like Wall Street, that kind of loss ends careers. But in this case, it did something different. It changed how he thought, completely, because the problem wasn't intelligence, it wasn't experience, it was something deeper. Risk. Not the kind people talk about, but the kind hidden inside the system, the kind that builds quietly until suddenly everything breaks. That realization became an obsession, because if you could understand risk before it shows itself, you could avoid disasters and position yourself ahead of everyone else. So in 1988, he helped build something new. Not a louder company, not a faster one, but a smarter one. A firm built on one idea, understand risk better than anyone else. That firm became BlackRock. At first, it didn't look powerful. It focused on bonds, on managing money carefully, on helping institutions avoid mistakes. No headlines, no attention, no hype. But underneath, something was being built. Systems, data, a way to measure what others were still guessing. And over time, that difference started to matter. Because in finance, the firms that survive aren't the loudest. They're the ones that see problems early and avoid them before everyone else reacts. That's how BlackRock grew, quietly, carefully.
The market was just of its infancy, and then in 1982, we had the ability to put a PC on our trading desk. Before that, you had no ability to put a computer on a trading desk. And it was very clear to me that if we could have computing power on the trading desk, we were going to have the ability to dissect cash flows of mortgages. And we were the most profitable component of First Boston in 83 and 84 and 85.
But the real turning point hadn't happened yet, because what came next was a crisis that would break the system and put BlackRock right at the center of it. When the system broke, for years BlackRock had been building something most people didn't notice. Not size, not fame, but something far more important: trust. And in finance, trust is the real currency. Then came 2008, a collapse that started quietly, then spread until it reached the entire global system. Banks froze, markets dropped, confidence disappeared, and at the center of the problem was something most people didn't fully understand. Complex financial instruments built on loans that were never as safe as they appeared. As defaults began to rise, the value of those assets collapsed fast across the system, and suddenly no one knew what anything was worth anymore. Not the banks, not the investors, not even the institutions that had built the system. That's when something unusual happened. BlackRock was brought in, not to invest, not to speculate, but to understand, to analyze risk at a level others couldn't. Because while the system was breaking, BlackRock had been building tools to see risk more clearly than anyone else.
To America's foundation of economic policy was based on consumerism. We built this entire economy with a belief that if more Americans can have more things, then we have happy Americans, and we built a whole geopolitical platform around that.
And now that system was needed. Governments, central banks, major financial institutions all needed answers. Fast. What is this worth? How bad is the exposure? Where are the risks? And BlackRock had the system to answer those questions. This wasn't about control. It was about capability, the ability to see what others couldn't. And in a moment like that, that ability becomes critical. Because when the entire system is uncertain, the one who can bring clarity becomes essential. And that's exactly what happened. BlackRock's role expanded, quietly, step by step, from analyzing assets to helping manage the system itself. Not as a bank, not as a regulator, but as a partner to those who needed answers. And once that trust was established, everything changed. Because in finance, the moment you become trusted in a crisis, you don't go back to being just another firm. You become part of the system. And from that moment forward, BlackRock's position was no longer just about managing money. It was about being inside the structure that manages money. But that was only the beginning. Because while the world focused on recovery, BlackRock was building something even more powerful. A system that would allow it to understand markets at scale in real time. And that system would change everything. After the crisis, BlackRock was no longer just a company. It had proven something, that in moments of uncertainty, it could provide clarity. And in finance, clarity becomes influence. But BlackRock didn't stop there, because understanding risk was only the beginning. They built something bigger, a system. It's called Aladdin. Not a product you casually download, not something most people interact with directly, but behind the scenes, it is everywhere. Aladdin is a platform that analyzes investments and measures risk across entire portfolios. In real time, it looks at millions of data points across markets, across assets, across entire economies, and then it answers a simple question. What is the risk of this decision? Not tomorrow, not next week, right now. And that changes everything. Because most investors react to the market. They respond to changes after they happen. Aladdin doesn't wait. It calculates continuously. Over time, this system became extremely powerful, not because it controls markets, but because it understands them. And understanding is where influence begins. Because when you understand risk better than others, you make better decisions. And when institutions trust your system, they begin to rely on it. Banks, asset managers, insurance companies, even governments, all feeding data into the same system, all using it to guide decisions. And that creates something important. Visibility. BlackRock doesn't just manage money, it can see patterns across a large portion of the financial system, where risk is building, where capital is flowing, where pressure is forming. And in finance, that kind of visibility is extremely valuable because it allows you to position early before the crowd moves. And that is exactly how large shifts happen, quietly, gradually, step by step, not with headlines, but with positioning. And as this system grew, BlackRock also expanded its reach through something that looks simple, but scales globally, exchange-traded funds, ETFs. These funds allow investors to buy exposure to entire markets with a single trade. Instead of buying one stock, you buy a basket. And one of the biggest ETF providers in the world is iShares. This is important because through ETFs, BlackRock connects to millions of investors directly. Retirement funds, pension plans, long-term savings, all flowing into systems that it helps manage. But here's the key point. BlackRock doesn't control companies in the traditional sense. It doesn't run them, it doesn't operate them. But it is present across thousands of companies through ownership stakes held on behalf of investors, small percentages, but across the entire market, which creates something unique. Reach, not control, but presence. And when you combine presence with data and scale, you begin to understand the structure. This isn't about one company taking over, it's about one company becoming deeply integrated into how the system functions. And once that happens, you're no longer outside the system, you're inside it. But with that level of scale comes attention, questions, and pressure, because eventually people start asking the same question. What does all of this mean for everyone else? Because once you become this embedded, you're no longer just a participant, you become a topic of discussion. And BlackRock became exactly that. People began asking questions about influence, about ownership, about power. Because when a single firm has visibility across markets and connections across institutions and systems that guide decisions, people start to wonder, where does guidance end and control begin? Critics argue that influence, even without direct control, can still shape outcomes. Because if you can see the system and others rely on your view, your perspective starts to matter a lot. And in finance, perspective can move billions. But BlackRock's position is not as simple as it looks. It doesn't act alone. It operates inside a system built on regulations, competition, and global financial structures. Other firms exist, other players, other systems, each with their own influence, each with their own reach. And that balance is important because no single institution fully owns the system. Instead, they all interact within it, competing, cooperating, balancing risk. And this is where things get complex because the financial system itself is deeply interconnected. Banks lend to funds, funds invest in companies, companies rely on markets, markets depend on confidence, and confidence depends on information. This is where tools like Aladdin fit into a larger reality. They don't replace the system, they operate inside it, helping institutions understand risk, navigate uncertainty, and make decisions faster. But speed doesn't equal control, and data doesn't equal power. Not on its own. Power in this system comes from many layers: regulation, capital, trust, and execution. And BlackRock exists at the intersection of all of them, which is why it draws attention. Some see it as essential, a stabilizing force, a tool for managing complexity. Others see it as too powerful, too connected, too influential. But both views miss something important, because the real system is not one entity, it's the network, a network of institutions moving capital across borders, guiding trillions of dollars every single day. And within that network, BlackRock is one of the largest nodes, not the entire system, but a critical part of it. And that distinction matters because influence in this world doesn't come from control alone. It comes from connection, from data, from scale, from trust, and from being present in the moments that matter most. Now the question becomes not just what BlackRock is, but what it represents. A shift in how finance works, a shift in how decisions are made, and a shift in how power moves quietly through systems instead of sitting in one place. And that brings us to the final layer. The question that ties everything together. Is this just a company inside a system, or has the system itself begun to change?